Hey guys, what's up? Coattail Trader from coattailtrader.com. Just wanted to go over some stuff that I was looking at here. I noticed that the levels. This is why it's important. This is kind of a reason why I use these deviation bands. I just wanted to show you this. So if you'll notice here, price really wasn't coming around to the levels. Interesting how when it from all the way back here around 8:30. We had a bounce off the level, not surprisingly. Went all the way up, kind of did some channeling up here. Came all the way back down to the levels again. And then turned right around. Amazing. So if you'll notice, comes down to this level, tests it, rejects off it real quick, tries to close below it here, couldn't do it. Now normally this would be a signal to go short. However, as I've mentioned before, because I like to wait for when these levels are so close, 41.75 and 40.50, and it's only not less than a point and a half. I like to wait for both of these levels to be broken just for extra confirmation. Aggressive short, sure, you could have entered here and maybe played it to the level, but I don't like to trade that way. So if you'll notice the bands, though, when it broke this level, price was riding these bands, which indicates to me that there's a possibility of reversal coming. So you can see price came out of the bands twice, almost at the levels. This would have been a nice bounce trade had this not been here. Because of course, if you forget about this level for a second and just use this one, so you got your bounce, and then this would have been an entry candle to go long. But obviously with this level right here, I decided not, you don't take that. I wouldn't have taken it. So we're waiting again. We wait for price to come back in inside of this deviation area, so we kind of have a better feeling about the trade. The odds are better. So here's another bounce trade. This would have been another aggressive long, but it wouldn't have taken. Another one right here, off of this level. Now as you can see, so if I was trading this, what I'd be looking for, I'd be watching these two levels very closely. Obviously, price is bouncing off of both of these. It bounces here and then bounces here. Bounces here, comes up, bounces here, bounces here. Finally breaks through. Now, again, we're looking for the long trade. Right here is a long signal. However, look at the bands. The price is very close to the top of this deviation. It actually came out and was rejected outside of the band. And then you can see in the next candle, it didn't, it went down, tried to come up again, and it didn't work out. So for me, I would wait. What happens is when it's outside of this band like this, I wouldn't take it. I wait for a bounce trade to get long. So this would have qualified. I wait for price to pull back. This would have qualified for a bounce trade, but I never got the confirmation signal. Here's the first signal right here, but I never got confirmation. And as you can see, price went down. Okay, so it was rejected. Now price crossed under here. Bounce trade is no longer valid. Now we're either looking for a short past this level or a bounce off this level. And this is why when you have levels so close to each other, these deviation bands are very good to have. So price crosses the level right here, comes down, breaks this. Now we would be looking for a short. Here's the signal, but there's waiting for confirmation. You don't get confirmation. Price crosses up here, again coming outside of the bands, which indicates to me that it's probably not going to last. So I would wait, and then obviously this candle cancels this trade. Now you're looking for this is an aggressive long, but for me, again, I don't trade those. I wait for the confirmation signal above the levels. So here's your close above the level. Now, keeping in the rules, you could have just entered here, and this would have been a combination signal and confirmation because the bar is so big. So you could have done it here, and you would have been just fine. However, I wouldn't have taken that. Again, I wasn't trading, so I didn't take it. I'm just kind of going over this just to kind of demonstrate. It's well away from the band, so that means price has a little bit of room to run. You'd basically be looking for a point off 42.50, which would have gotten you basically right to the top of the band, a little bit outside of it, so you would have been okay had price came up. But if you were waiting for your signal, your regular confirmation signal, it would have been this candle right here. Now, for me, again, because I'm paranoid, whenever I see that happen, I would have waited. I would be looking for a bounce trade now because it came out. Now, had you entered here, you still would have been fine. It wouldn't have taken you out. But me, I wouldn't have taken this trade. I would have been either looking for for a bounce trade. So here you would have gotten that bounce trade. Here is your candle right here. It's within my 2-tick rule. And then here's your signal long right here. It closed above this level right here. Boom. Signal, confirmation, entry, exit right here. You're good. And you can see this candle started to come outside. I wouldn't be surprised if, then price pulls back to this level right here, which is the mean. It pulls back exactly. Once it breaks these bands, it's just a kind of a signal like, hey, just be prepared, caution. You can still enter a trade, but the odds are against you. So now at this point, if you wanted to take it, now I'd be waiting, since you're basically right in the middle of these two levels here and here. There's really no trade here unless we get to this level, which you can see that it did. And it broke outside of this band. Again, here's a break of the band right here. Now you're waiting for confirmation. You get a cancellation signal right here, so now the trade is invalid. Now you wait for a new setup, which you get right here. Here's your signal. Here's your confirmation. Not outside the band. You should be safe. 48 to 49.75. Boom, there you go. Hit it. So if it would have taken you out, you at least would have been break even had you not taken the point. If it hit your point, now what I do, again with my rules, when it gets 3 ticks in my favor, so here would be my entry, and then when it goes 3 ticks, I move my stop to break even. Now, it hit my target. A lot of times, as we know, because I always use limit orders, just because price hits your target, that doesn't mean you're going to get taken out. In sim mode, you get taken out. But in real life, it could take a while. Just depends on how many contracts actually trade there. And I've seen that happen before, where I'm all the way up a point, it hits my target, and I'm excited, but then it reverses because not enough trades happen there. Which, if you look, that may have been the case. I mean, after this happened, it opened even down. It gapped down a little bit. So the odds are I probably wouldn't have hit my target. So what I do is when my price hits a full point, when it actually hits my target, I move my stop from break even to +1. So at least no matter what now, I'm getting some profit. Sure, it's only $8 or whatever it is, but $8 is better than $0. I covered my commission and made a few dollars profit. There's always the next trade. Now, if I got taken out, I'd be looking for the bounce, which you get right here. Now you would have missed it because it didn't come down, but as you can see here, looks like it's setting up for another bounce. But I just wanted to show you, look what happened when price came out of this band. It came back in and then set up again. So that's why I say the power of these bands is incredible. I really like to use them. They don't always work, of course not. If we go back a little bit, you can see that a trade was generated signal here, and it was halfway outside the band, and that's for me. I would never take a trade with it being half outside the band like that, but obviously it worked out. Same here. Look, it came outside the band, but it didn't retrace, and then it retraced finally down here. What I use these for is just caution. It doesn't mean that you don't take the trade. For me, most of the time it does. But what it's telling you is just to be cautious. It's kind of like a yellow light that says, hey, this is an area that may reverse. Just be careful. Doesn't mean not to enter a trade. It just means to be careful. Now, I do have another strategy that I actually trade off of these bands, but that's a video for another time, and I don't really use that one that much. It works fairly well, but I like trading off of these levels because, as you can see, they work pretty damn well. So look at that. In that short period of time that I was just showing you the deviation, a bounce signal was just generated right here. Now, I would not have taken it again because the bands it's already outside the band. And even if I would have, put my trade in here at 50, I wouldn't have gotten filled. It hit a target, but again, that doesn't matter. My rules, I would not have gotten it. Now, there is a theory about these bands that says the more that they stick out like this when they turn, that means, you know, a high price move is coming. So if you were in this one, you would have started to seen this one turn up. Right here, when this candle closed, you can see it's starting to turn pretty well. Now it's kind of really starting to. So price could continue to move forward. I wouldn't be surprised if there was a pullback here at some point pretty soon. So, but if you notice, when those bands kind of separate like that, like right here, so you're in, boom, right here. Notice how the bands kind of split apart from each other. There's a theory out there that says that means price is going to continue. Kind of same with this one right here. When they start to split and turn up opposite each other, you know, after a congestion period like this, that kind of means that it's supposed to mean that price is probably going to, move pretty significantly. It's kind of like a rubber band, where this is the rubber band just kind of sitting there, and then all of a sudden price starts to break, and boom, it goes in some direction. This is the pulling of the rubber band, and then the snapback is right here. So, but I just wanted to show you that as far as the deviation bands are concerned, just why I like to use them and how they can generate signals. It just gives you a better opportunity to wait and be patient. Like right here, I mean, perfect example right here. See, price already, it came out a couple times, it pulled back. I wouldn't be surprised if it came back to somewhere around here. But that's all for now. Just wanted to show you that. And this works on any market. It's not just the E-mini S&P. It's pretty much any market. Thanks for watching. Visit my website, coattailtrader.com. Follow me on Facebook, Coattail Trader, and follow me on Twitter, @CoattailTrader. Thanks, guys. Happy trading.